How's it going, everyone? Today we're going to be looking at a company called Symbotic. The company had a pretty positive earnings report this past May 8th and was up about 7 to 10% following that earnings report. If we take a look at the 5-year, this company was trading as high as 50-something dollars per share. It's currently at 24. If we zoom in on the 5-day, you can see that it was up between like 8 and 10% following this earnings report. And we're still trading at about $24 per share following it. So just a quick video on what Symbotic does. So they automate Walmart warehouses and distribution centers, and they have these robots that can unload the trucks as well as be able to pull that inventory from the shelves within the warehouse. And they've got these fast little machines that can drive around and pick up these boxes, and as you can see here, also place them on the shelves. So the biggest benefit to Walmart and other companies is that it saves 30 to 60% less space required, or less space for these warehouses. So that's what the company does. And we're going to take a look real quick. So Walmart currently has a stake in Symbotic. They have about $330 million worth of share, as well as Symbotic in January 28th of 2025 actually acquired Walmart's advanced systems and robotics business. So this agreement, Symbotic will engage in a development program funded by Walmart to enhance current online pickup and delivery fulfillment systems, as well as to design new systems to meet the needs of current and future customers. If performance criteria are achieved, Walmart is committed to purchasing and deploying systems for 400 accelerated pickup and delivery stores or systems at stores over a multi-year period. Walmart will pay Symbotic a total of $520 million, including $230 million that was paid at the closing of the acquisition. So this transaction and new agreement could increase Symbotic's future backlog by more than $5 billion and adds a micro-fulfillment solution that expands its addressable market by more than $300 billion in the United States. Another thing this company has is a $23 billion backlog of warehouse automation orders. So this company has a lot of guaranteed revenue in its way. And we'll take a look at some of the financials that were reported, the highlights from this quarter. This is quarter 2 of 2025. They had a revenue of $550 million and a net loss of $21 million and an adjusted EBITDA of $35 million for the second quarter of fiscal year 2025. By comparison, the second quarter of 2024, Symbotic had a revenue of $393 million and a net loss of $55 million and adjusted EBITDA of $9 million. So overall, this company has been trending towards profitability. It is not profitable yet, but you can see there's a clear advancement in revenue, as well as that net loss shrinking in terms of quarter of 2024 compared to now for the second quarter of 2025. Cash and cash equivalents increased by $52 million. They have $955 million in cash at the end of the second quarter of fiscal year 2025. And a key note from the CFO is that second quarter revenue grew by 40% year over year, and we delivered a record number of system starts and completes. For the third quarter of fiscal year 2025, they're expecting revenue of $520 million to $540 million and adjusted EBITDA of $26 to $30 million. This company is extremely conservative when it comes to forward outlooks. They don't like to overpromise, because it can be somewhat hit or miss depending on, like, are they acquiring Walmart's robotics unit, or are they making changes within the company that can very much affect this company's earnings quarter over quarter. It's a very fast growing company. If you can't tell, 40% year over year revenue growth is insane. Another thing, a keynote I highlight is that their software maintenance and support has increased from March 30th, 2024 is at 2.5 million, and now it's at 6.6 million as part of the revenue. So nice thing to see is that recurring revenue is increasing. Operations services as well increased by about 9 million quarter over quarter. So it's nice to see recurring revenues increasing as they start to complete these systems. And I'm sure they'll be making a lot more money off of the software, the upkeep, as they start to roll more of these systems out. So the biggest headwind for this company is really just becoming efficient and being able to have more profitability as they roll out more of these systems in the future. They don't have a sales issue because they have that massive backlog. It's a matter of making their processes more efficient and becoming a more profitable company, or becoming a profitable company, which they are not yet. So earnings per share was negative 4 cents. They missed expectations by 5 cents. Wall Street was expecting them to potentially become profitable this quarter. So, but they beat revenue expectations by 27 million. That's part of the reason why the stock traded higher following earnings. And then Wall Street's gone, or at least Seeking Alpha has them at revenue estimate of 534 million for next quarter. And again, I mean, the estimates have been very, very conservative for this company. But in terms of valuation, as you can see, valuation, it gets a B- rating from Seeking Alpha. We've got a price to sales ratio of 1, which is pretty nice. Price to cash flow is at 6. And then earnings per share, I'm not quite sure how accurate that is, but it's not a terribly expensive company at $24. We've seen it much more expensive, like $50 per share. Overall growth, they get A rating, 42% year-over-year revenue growth, as well as forward revenue growth is expected to be at 35%. So that's pretty nice. Earnings per share forward long-term growth, 3 to 5 year compound annual growth rate is set at 30% expectation. So very good growth from this company. Profitability is getting A-. Gross profit margin has been at 18%. Net income margin is at negative 0.45%. And we'll go ahead and just take a look at their net income real quick. You can see that overall it's trending better, So September 2023, we're at 6. June 2023, we're at high as 4, and higher the farther you go back. March 2024 was their highest net income loss, it looks like, of a negative 8.8 million. But you can see the trend upwards. We had a $2.8 million net income in September 2024, and now we're back to the negatives, and we're at negative 3.9 million as of March 2025. So overall, the company's trending in the right direction. The revenue growth is beautiful. It's just a matter of, can they become efficient enough? And maybe that's a problem with scaling, Is it taking them time to get the right people in place to scale, and are they spending more money as they scale? But I think overall, this company has a very bright future ahead of it. If you're interested in like a robotics company as well as artificial intelligence, this company kind of achieves both of those. So let me know in the comments if you think this is a good company to invest in. There's a lot of different viewpoints on this company. Is it good? Is it bad? Or if you think it's a good investment and that partnership with Walmart is enough to outweigh the current cons, which is the efficiency issue. If you like this video, consider subscribing. If you didn't like this video, then don't subscribe. Thank you for watching. Y'all have a great day.